Case study number 3, Hong Kong. Woo! Sunac. This is damn hot, man. And this is for me, I feel very vindicated because I presented this to ICBC Bank in Hong Kong, and they were shocked. Now let me first dive into the story about Sunac. This is the founder. You always go after the founder because he will know how the business will evolve. And this guy went to jail. It's really a classic story, all right? Went to jail for some reasons, get out of jail, you know, and try to clean up his life. And right now he's one of the richest men in China already, right? Now that it was in 2013. So 17 minus 13, 4 years ago, not that far away, pretty recent. And guess what? We spotted this. Woohoo! Consecutive purchase starting from 7 December, 8 December, 9 December, 3 days, 42 million, 20 million, 22 million. Average price is about $6.50 per share. And then continues 12 December, 13 December, 21st December, against floating at 6.4, 6.6, 6.5. So literally for the whole month of December, you have every opportunity to react to this. And you can buy the shares at 6.50, all right? Now, if you were to buy the shares at 6.50, and you can see clearly over here, this is the month of December, you have all the time to react, but you must be very disciplined with your step 1. You know today what's the stop price? Can you all please check on the app? Look for Sunac. This is obscene, man. This is obscene. I can't believe it. Tonight it's trading at 29.8. Market just closed. You take out your calculator right now. 29.8 divided by 650. 458% unrealized profit return for 8 months holding period. Hello, are you all still alive? Say yes. And what's the step 1? Just follow Mr. Sun. It's not complicated. Now, let me slow down a little bit. At this point, I probably will face some protest from some of you in the audience and say, hey, Clemen, something is wrong here. You mean, you never look at the fundamentals, ah? Huh? You never look at the P multiple. What's the business, ah? Or maybe I should rephrase my question in such a way. Do you think the CEO of a public listed company look at price metrics or look at stock charts to run a business? Yes or no? No. So if the top guy out there, his brain is not looking at what you're looking at, then perhaps you're not looking at the right thing he's supposed to be looking at. This is a very important breakthrough for me, personally, because I was barking up the wrong tree for many years. I tell you, I come from fundamental background and technical background. I went up the wrong tree. And a phenomenon like this, can it be explained? Cannot be explained. Because you know why? Recently, SGX organized a forum, how to help SGX listed companies to raise funding in Hong Kong and China, and they assembled a panelist, and in the panelist there was a fund manager from Hong Kong, and after they presented their stuff, I'm the first guy to ask the question. I asked about Sunac. Can you guys please explain to me what happened to Sunac? Because my question is this. On 11th of July, when the announcement came out, Sunac bought over the largest property group in China, which is the Wanda Property Group, Wang Jianling. The stock price popped 13% on one day. Boom, go up. 3 days after this, the stock price dropped 19%. It's like, wow, yo-yo, no? Go up, go down. And it dropped because China announced that they are going after Wang Jianling because he moved a lot of money out of China. They are very unhappy with him right now. And they say this deal cannot proceed. And guess what? The moment Sunac announced that it's not going to buy Wanda Group hotel asset, the stock price jumped again. So I posed this question to the panelists, and guess what? One of them is actually a fund manager who owns the shares of Sunac. First thing he told me, Clemen, you know, our fund owns the shares at $5 a piece. Well, I say you're damn good. That means he's making so much money, more than 500% IRR already, right? And you know what's his answer to my question? Clemen, even for us as a fund manager, we cannot explain. Beyond us really. We just know the stock price went up. Hello, say yes. Yes. And he's a professional fund manager. AUM more than $1 billion. Asset under management. Right, some things is just beyond us. So from here, gorgeous play. And if you are looking at this deal, would you dare to take the plunge? Because this is based on AI type number 3, acquisition deal spike. Are you able to spot a deal whereby the company is going out there to acquire other people or to be acquired? And this is something really, really exciting for Spiking team, because last year we spotted 2 very good deals. First one is Super Group. How many of you heard of Super Group? 三合一咖啡, right? And I own the stock because I simply follow Sam Gui. You look into the Spiking app, 9 consecutive trades, 2 months before announcement, Sam Gui went buy 9 times. I follow him on the 5th time. Announcement came out in November last year. Company got acquired $1.3 billion. I realized 52% profit return. Just like that. And Sam Gui is another legend, right? we can spend one night just talking about Sam Gui. But that's the thing. We also applied the same AI, looking for acquisition buyer candidate. Last year we spotted InnoValues. Private equity firm bought $343 million off InnoValues, got delisted in the stock market. Timing is key. Problem is this. When this news came out on 18 July, shares plunged. Remember I told you it went up, went down? At this point in time, what's your reaction? How should you base your reaction on what reference point? Because first we must establish our step 1. Right now is about step 2 really. Because step 1 is about you going in to buy, step 2 is about you getting out to realize a profit. What's your reaction for step 2? This news came out, panic, chawa, right? Most of people will just throw the stock and run. And those who throw the stock and run, they'll cry right now, because right now stock price climbed to $30 really. So again, we follow the big guys. If they sell, then we sell. And I can tell you, looking at the historical statistics, most of them don't sell until they got bought out. Say yes. Yes. So one of the biggest lessons that we learned from this whole journey is that we must exercise extreme patience when we look at public companies, especially looking after our own money. All right? And this is really, really beautiful example, and I call it a classic. So I was in Hong Kong Exchange in first week of July, and I presented this case study. And back then the news of Sunac buying Wanda Group was not released yet, and they say, hey, how do you know about this deal? Because our own in-house analyst just wrote a report asking all ICBC clients to buy up shares of Sunac. And after I came back 1 week later, the news came out. They announced acquisition of Wanda Group property portfolio. So can you see that the data of following big guys is always one step ahead of the news?